Hey everyone, Meta Platform stock reported quarterly earnings results that sent the stock price down by more than 15%. Why did the price fall? I'll discuss that in this video. I'll also update my recommendation of Meta Platform stock. Coming into the quarter, I did have Meta Platform stock rated as one of my top 25 stocks to buy. So let's see if I'm updating that recommendation following these numbers. So let's get right in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Meta reporting 36.455 billion in revenue for the quarter. That was up 27%. Income from operations was up to 13.8 billion, which was up by 91%, a more than $5 billion, $6.6 billion increase in income from operations, sending the operating profit margin soaring to 38%, up from 25%, a remarkably good performance for revenue and profit margin from Meta Platforms. But why is the stock price down? Well, we're going to see the reasons why the stock price down a little bit later in the video. The initial numbers that I've highlighted here are all going to be positive. So let's take more of a look here. So the family daily active people on Meta's platforms increased to 3.24 billion for March of 2024. That's up by 7% year over year. Remarkably, Meta keeps finding people around the planet that don't already have one of their accounts. It's truly impressive how it keeps adding more and more people, despite already having more than 3 billion people using its platforms, one of its platforms, on a daily basis. That's truly remarkable. So the number of ad impressions delivered across its family of apps increased by 20% year over year. And more impressively, the average price per ad increased by 6% year over year. So it's one thing to increase the number of advertisements shown. It's another thing to increase that number of advertisements shown and increase the price per advertisement shown. A double benefit for Meta Platforms, both getting to increase the supply by 20% and increase the price by 6%. That's really good as well. I was pleased to see this from Meta Platforms. And this is good news for other advertising related or advertising supported companies, including Alphabet, Snap, Pinterest, and others. Price of advertising going up. That's good news. One other thing I liked about Meta's report is that the job cuts it announced last year are now still in effect. Only 69,000 employees. That's a 10% decrease year over year. So it was able to deliver these excellent results with fewer people. In other words, it's becoming more efficient. It's getting better at doing what it does. It requires fewer labor hours to deliver the things that Meta Platforms has been delivering. So far, everything looks great. Here is where we start to see some of the negative aspects of some of the things that cause the stock price to come down is the outlook, the commentary on what Meta Platforms expects from the next quarter, from the full year 2024 and beyond. And this is what spooked investors. For one, the revenue forecast for between 36.5 and 39 billion was slightly below what analysts were expecting from Meta Platforms. That isn't really the cause for the price decrease. It starts with the spending. Meta Platforms saying that they expect full year 2024 total expenses to be in the range of 96 to 99 billion. That was up from 94 to 99 billion. In other words, Meta Platforms saying that we expect to spend roughly $2 billion more than we initially were planning to spend. And that's due to higher infrastructure and legal costs. For Reality Labs, they continue to expect operating losses to increase meaningfully year over year due to their ongoing product development efforts and their investments to further scale their ecosystem. This is a little bit concerning for investors because remember a couple of years ago when Meta Platforms started talking about spending tens of billions of dollars on the metaverse? That's partly what sent the stock price crashing a couple of years ago. And then Meta Platforms came back and told investors, never mind, we understand you don't want us to do that. We'll pull back our spending in that category. And once Meta Platforms told investors they were going to reduce spending on the metaverse, That's when the stock really gained momentum and soared since that moment. But here, what Meta Platforms is saying is that, you know what, we're going to ramp up spending again. Get ready because we're going to spend billions of dollars more. And then they continue. They anticipate 2024 capital expenditures will be between 35 to 40 billion. That was up from the prior range of 30 to 37 billion. So the midpoint increases from 33.5 billion to 37.5 billion. So $4 billion more spending on capital expenditure in 2024 than was initially expected, on top of the extra 2 billion on operating expense that was expected. So spending up by billions, several billions. And then to make matters worse, they say while we're not providing guidance for the years beyond 2024, we expect capital expenditure will continue to increase next year as we invest aggressively to support our ambitious AI research and product development efforts. So the good news here is that they've replaced the word metaverse. They've essentially taken that out because they understand metaverse not popular, right? They replaced that with AI. You see AI talked about a lot here in their forecast. They're investing in AI, not metaverse. No, it's not metaverse. We know metaverse is not popular. We're going to replace that with AI. And the distinction is really up to opinion in terms of what is a metaverse and what is artificial intelligence, and being able to determine the the line that is here or there. I mean, a lot of companies are using this artificial intelligence term very loosely nowadays because it's so popular. You're hearing this more and more. Everyone wants to label what they're doing as artificial intelligence. And, you know, it's hard to say, well, no, that's not artificial intelligence. This is artificial intelligence. So you can understand Meta's interest in trying to label all of these spending categories, or most of these spending categories and needs, as artificial intelligence. But some of this spending is going to the metaverse. But Meta also understands that's not popular, so they're not, labeling it as such. But some of this money will go to that. And that's as yet an unproven category, but Meta feels like that is an area where its business can thrive better, where communication is happening in the metaverse rather than where we're doing it now. It'll be more intuitive, it'll be more valuable, it'll be a better value add, and that remains to be seen. It's risky and it has investors spooked, and that's, the price already crashed a couple of years ago when they started talking about these initiatives, and now it looks like they're thinking about that again, and it's really getting investors hesitant about staying in this stock if it's going to be ramping up these spending efforts rather than trying to harvest this social media empire that it's built with strong competitive advantages, with the number of users growing, the number of advertisements shown increasing, the price per ad increasing. All of that is really, really good. The spending part is what has investors spooked. So the price is down 15.8% as of this recording in the aftermarket hours. Meta Platforms is still trading at a forward price to earnings that is reasonable at a forward PE of 21.2, even after this stock price decline. So am I keeping Meta Platforms on my list of top stocks to buy following these earnings results? Yes, I am. I'm reiterating my buy recommendation, or top stock to buy recommendation, for Meta Platforms, although I would not be surprised if I move Meta Platforms off of my list in the next 3 to 6 months as more information about its spending ambition comes out. These are billions and billions of dollars of spending increases that Meta Platforms is implementing. I want to know more about that. How much of it is going to the metaverse? Where is this going? How is that going to turn into revenue and profit and cash flow for investors? I want to know more about this. So I wouldn't be surprised if Meta Platforms is not long for this list over the next 3 to 6 months as I get more information about its spending ambitions. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.